In this week's episode of the Stock Scores Market Minutes, I'm going to show you one of the critical things that separates good traders, successful traders, from those that don't succeed. And you might be surprised what it is. Then I'll get into my regular weekly market analysis. We'll look at the stock market, the commodity market, the currency markets, figure out, is it boom or bust? Is there a stock market crash coming? And then finally, look at the day trade of the week on MNK. So there's a common characteristic of successful traders, and it is not, which may be a surprise, picking the right stock. Picking the right stock is important, yes, but it is not the most important thing. You see, the best traders really don't trade stocks, they trade situations. They trade situations where the reward potential outstrips the risk. There is an asymmetric risk-reward relationship. And in this way, what is so essential is that good traders know how to take losses. They know that they're not going to be right all of the time. And when they're wrong, when the market tells them that they are wrong, they get out and move on to the next one. And they take small losses that are not going to crush their overall performance. The wins will come, the losses will come. What's important is that the wins outstrip the losses, and that's where that asymmetric risk-reward relationship comes in. If you risk $1 to make $4, that's smart. If you risk $1 and you lose $5, well, that is just bad discipline. All right, so if you want to be successful in the market, don't focus on winning, become a good loser. The best losers are the ones who do well in the market. All right, well, let's get into this week's market analysis, and we'll jump over to my website, stockscores.com, to look at some of the charts in stocks, commodities, currencies, that sort of thing. So what do we got here? The first one that we're going to look at is the S&P 500. This is the long-term weekly chart, and you can see the S&P is starting to break out of this little ascending triangle pattern on the weekly chart. So it broke the downward trend line. It's been building stability for 8 months, and it's now finally starting to creep through that resistance. So that indicates that the S&P, the large cap US stocks, are likely to move higher. If we look at the short-term chart, you can see the little breakout that happened midweek this past week. That was on comments that the US would likely not default on its debt, as promises made by President Biden. We'll see if that happens, but certainly the market feeling optimistic about that. Now I want to take a look at the small cap stocks in the US as well, because the chart here is quite different. This is the downward sloping trend line, a descending triangle here. Yes, this market moved up a little bit this week, but it's a much weaker looking chart. And I think one of the reasons is that small cap stocks tend to be traded by retail investors. Large cap stocks are more dominated by institutional investors. And I think retail traders are still suffering because so many retail traders chased things higher in 2020, 2021, things like Bitcoin, speculative stocks. They chased them higher, and then those things broke down dramatically, and a lot of those retail traders are buried in those things. Why? They didn't know when to take the loss. They didn't get out and move on or keep their money in cash for the next opportunity. So I think that's why there is a difference between those two charts. All right, let's take a look at the Canadian market, T.XIU. Unlike the S&P, it is not breaking through resistance yet. It is building a decent pattern, but it's more of a neutral chart in the long term for the TSX. And in the short term, a little bit of weakness, but generally a sideways market for the TSX. And you'll see why in a moment. There's a heavy concentration of gold on the TSX, and you can see that gold had a bad week this week. It's still in an upward trend, but that weakness this past week, I think, weighed a little bit on the TSX. You can see it here in the short-term chart, breaking through some support, falling tops building, so you got to be careful with gold. And then oil hasn't been doing super good in the last month and a half, 2 months. Sort of rebounded a little bit this week. You can see it very slightly there, but this is kind of a negative chart. Looking at the 1 month chart, You can see we've got a downward trend. We're just starting to build a rising bottom. If we could break up through 65 on USO, that might give oil some stability. And that could happen any day. But until it happens, I want you to still be careful with the oil stocks. How about the US dollar? It's interesting. It's actually been doing well the last couple of weeks, building rising bottoms, breaking this downward trend line, and hanging on to the long-term upward trend line. So that actually looks more likely to go higher than lower. You can see this week the rally there, and again, perhaps the market thinking that the US won't default on its debt and the US dollar remains the hegemonic currency of the world. How about Bitcoin? It's obviously terrible from 2020 and 2021. It's been inching higher, but now threatening the upward trend line. If we look at the short-term 1-month chart, you can see that the trend over the last month is down, and I don't see any signs that that's changing. We have these falling tops. Now, if we can break that downward trend line from a little rising bottom, then you could see Bitcoin rally, but I want you to be pretty careful with these cryptocurrencies right now. The final chart that I want to look at before we get into the day trade of the week is TBT. This is our proxy for interest rates, and you can see that it's broken the downward trend line and the market's starting to predict that interest rates may rise, that maybe inflation is not yet in check, and so the bond market's starting to say there could be more interest rate rises coming, and that is perhaps one of the reasons why the US dollar has been doing well. So my ratings then, US stocks bullish on both time frames, Canadian stocks neutral on both time frames. The same for gold. I've left it at neutral, but it could break that upward trend line. Oil, I've got bearish on both time frames. It might break that short-term downward trend next week, and then we can up the rating. US dollar bullish on both time frames. Bitcoin, long-term neutral, short-term bearish. And on interest rates, long-term neutral, but short-term bullish. All right, let's get into the day trade of the week. This is a weekly example of a stock that we picked up on in my Stock Scores Active Live service. If you want to learn more about that service, you can go to stockscores.com under the Trader Training menu. You can find out how to be part of that. MNK is a stock that we had on our watch list early, and then it really started to build abnormalities. So the first entry point was here on a strategy I have called a pullback play. It looks for these little pink and yellow dotted indicators. That's my own indicator called an action candle. And it first triggered there. Then it went into an upward trend, kind of went sideways. Right at the end of the day, it actually made another signal. I don't usually take trades this late in the day, but there you can see another action candle breaking through resistance for a little rally into the close, which was interesting. Again, I don't typically do those, but they are something to trade. Well, I hope that you've enjoyed this week's Stock Scores Market Minutes. If so, click on the like button, subscribe to the channel, and most importantly, trade well.